Looking at making dropping a product or segment decisions. Edna Fashion operates 3 departments: men's, women's, and accessories. Departmental operating income data for the third quarter of 2018 follows. So we have those 3 different departments: the sales revenue, variable cost, contribution margin, fixed cost, and operating income. Assume that the fixed costs assigned to each department include only direct fixed costs of the department: salary of the department's manager, and cost of advertising directly related to that department. If Edna Fashions drops a department, it will no longer incur these fixed costs. Under these circumstances, should Edna Fashions drop any of the departments, and give your reasoning? And so when we're looking at this income statement, we see that accessories has a loss of $18,000. And so should we drop that department? And so we can do an analysis here and say what would be the expected decrease in revenue. And we would expect it to decrease by $102,000. What would be the expected decrease in total variable costs? And variable costs would decrease by $91,000. Then the expected decrease in total fixed costs, and so that would be $29,000, which would give us an expected decrease in total costs of the sum of those 2 things. And so we would have let's calculate this here. So we would have an expected increase in operating income of $18,000. And so this one's simple because it's exactly, we could just get rid of this and we would now have an increase of our total operating income by $18,000, which means that this operating income that's currently negative would no longer be negative. It would instead be a positive $14,000. And so that would be a good thing. It isn't always this straightforward because sometimes those fixed costs are avoidable. So what if we were still going to incur all of those fixed costs? And so this was 0. Then that means our operating income would have decreased by an additional $11,000 rather than increasing by $18,000. Or maybe this is a partial. So in this case, it was $29,000. But what if they said we can get rid of the salary department, the salary of the department manager, we can get rid of their fixed cost, but with this advertising applies to everybody. So we can't get rid of that. So we are only going to be able to decrease our fixed costs by $10,000. And then we would see that that would still have a negative impact on overall operating income. And so the point being, they gave us an easy example where getting rid of accessories increases operating income by $18,000, and it's very obvious. But be aware that there could be scenarios where there's partial changes to the variable or the fixed costs.